Gosh. Okay, it's March. It's finally March. Just kidding. I can't believe it's already March. I uh I was gonna do way more of these videos and check-ins and I and to be honest, what happened is I got distracted. But this week, so this is my passive income portfolio, where I'm focusing on like high dividend stocks and for the most part high dividend stocks and then some REIT ETFs, um, which I showed you before. Something I've added. Um, I I haven't made any buys, which I kind of am disappointed now because these have done very well, or are starting to do really well in the sort of the comeback. But as of this week, this is March 4th, and we're seeing a lot of like momentum traders moving out of tech stocks and into more like traditional value stocks, which has been how this has been positioned through the pandemic. Um, I added gold, a gold ETF, SGOL, and I added some treasury bonds, very small amount, treasury bonds, and then tips. So I just wanted a little exposure to that for the future, not anything now. It's like basically I we'll come back to it. I've never been a gold investor. I don't think that gold is really inherently a good investment. To me, what I'm thinking more about now is the possibility. I also bought this materials ETF, and I just think that there's the potential for kind of a commodities super cycle event, where a lot of commodity based businesses can do really well in the coming years, um, just due to like economic growth all around the world. China is a very commodity intensive country. They import a lot of commodities and or I guess I shouldn't say they import a lot of commodities. They are the type of industries and manufacturing and all the businesses that are very prevalent in China and not so present in the United States anymore, are very commodity heavy. So investing in commodities, I feel like in the long term will be a kind of a short horizon. Long term could be a good move. That's sort of an aside that's sort of a whole thought process I haven't fully explored, but I wanted some positioning. So I was like, I don't know a lot about those businesses. Let me buy this ETF. It'll give me some exposure. I'm only putting 5% of each of these, of the total value of the portfolio, into them. That'll just grow over time next time I start contributing. Now, something I haven't shown you is, well, I created this growth and innovation portfolio, and I jokingly refer to it as my Cathie Woods from ARK Invest, her like a copycat portfolio. And I knew that all these companies were way overvalued and blah, blah, blah. And this week, we're really starting to see some price changes. Like maybe all of these overvalued tech stocks are getting repriced. They're falling down in value, and hopefully we'll have a legitimate correction. But I think what's happening is a lot of these, this started to turn. The narrative changed with the economy reopening, quote unquote. All these companies that have suffered through the pandemic are going to benefit from pent up demand, yada, yada, yada. And so investors are moving out of these tech stocks that did really well during the pandemic and into more traditional value companies. Anyway, I really like a lot of these companies. Tesla, just because it's fun, right? Like, I don't think that they're valued appropriately at all. But Netflix, Disney's not in here. Disney's in my other portfolio. Netflix and Disney, Amazon. Amazon's, in my opinion, kind of undervalued at the moment. I mean, these are really good companies that have done really, really well and will continue to do really, really well even out of the pandemic. I mean, most of these businesses that sell to businesses, other businesses, will do like this cloud computing ETF. Like businesses that use cloud computing software are going to do like these companies I have in my portfolio, their customer businesses are going to do better in an economy that's not being held down by a pandemic. So these, now I'm not sure that we'll get to the correct fair market value, whatever that is. I mean, I guess that's all day long, whatever the price is, because that's what the market is determining the price to be. But I think we'll get out of these overinflated prices, and if this continues to fall, then I'll probably heavily pour money into these stocks as opposed to this other portfolio. And I'm not sure I really should have separated these two. I did that kind of more for demonstration purposes than really how I should manage it. Like in my mind, it should really all just be one, and like I invest in all these different areas. But there was something fun about just separating like more dividend paying stocks, like income stocks, for lack of a better word, and growth oriented stocks. Most of these don't pay any dividend. Like they believe that they can give a better return by investing that money back into their business and growing their business. And I that could be true. The thing ultimately one day let's don't get on that tangent. Anyway, something else I did, and I could probably take credit for having caused this quote unquote correction, is I took $600, which was paid to me for my daughter from our federal government in the form of a stimulus check. I said, you know what? Let me just give this to her. We're gonna pick some stocks together, and she's gonna learn a little bit about investing. So we picked these handful of stocks. We did an ETF in the gaming industry because I really am not that into gaming. She loves video games, and I'm not that into it. So I would have no clue on how to. That industry is just changing so much. It would be really hard for me to know which individual companies to buy. But some of these other companies, like I wanted her to own companies she was familiar with, that she used regularly, and that obviously that I felt comfortable with her owning. And this is what we came up with, just for a few of them. So Tesla, mostly just because I wanted her to. I knew Tesla was going to come down in value eventually, and it sure has in the past. Am I showing? Yeah, since we bought it, it's down 23%, which is crazy. But so we put $600 in here and lost almost $50. And losing money when you first invest is a very, very valuable lesson. I still very much like learning to, I still believe in these companies, and that's the thing. It's that we're just, the price is adjusting. To me, it's cheaper to buy more of them now. It's not a should I bail, and I haven't lost money until I sell. Right now I still own these companies, and I can buy more of them for a cheaper price. And really a healthy market goes down like this so that you have periods of reinvestment where you can make more money. Now, I have about $600 in cash still in this account, this growth and innovation portfolio account. So you'll see me. Actually, let's go ahead and let's buy $200 for tomorrow morning. Tomorrow is going to be busy for me. So I'm probably not going to remember to do an order. So we'll just go ahead and set it up. And there we go. So that'll happen tomorrow. Look, there's only 300. I only put $400 in at first, mostly because I knew that these were going to fall. I didn't know. You never know what the future is going to hold, but they were so overvalued. I wanted to put more money into this portfolio, just continue feeding this. But in addition to all of these changes that I made, I have also gotten distracted by cryptocurrencies, which is a completely different type of investing from the standpoint of like what I like about investing is investing in good companies I believe in the long term and will that will grow over time. Now, I've never been, I said in the beginning, I've never really been much of a gold or precious metals investor. I don't think of that as an investment because it doesn't create profit. It doesn't create anything of value, where these businesses are creating value for people and earning profits for that. Now, I kick myself for not having gotten into Bitcoin years ago when a friend of mine told me about it. But like I told him, I don't really beat myself up too much because I would have sold it by now, because it has been so volatile that as soon as I saw, what I believe to be huge gains early on, I would have sold a majority of it to. I think I would have. I don't know. I'm a buy and hold kind of guy, and maybe I just would have ridden it out. But anyway, now we are, and what attracted me again to crypto is these credit markets that have opened up. You basically have people that own cryptocurrencies like Bitcoin can earn on up to 2.5 Bitcoin. They can earn 6% APY, and then over 2.5 Bitcoin, they can earn 3%. Then what I found really interesting. So what's going on here is this cryptocurrency bank, quote unquote. It's not a bank. It's not FDIC insured. It's a business that is lending cryptocurrencies. They're lending. They're creating loans from cryptocurrencies. So you can own a certain amount of Bitcoin and borrow up. If you borrow 50% loan to value, you can get an interest rate of 9.75 with a 2% origination fee. Now 11.75% interest is a lot of money to be paying in interest, but that's how they're able to pay these interest rates to those that are lending their capital. So it's just like a bank. It's like paying real interest rates and lending money at real interest rates. It's a crazy thing. We live in this world where like savers get paid 0.3% if they're lucky. It's just so low. It's crazy. I know that that's to get people to spend, but it's terrible. So I got attracted by these interest rates. Now, something to note, they charge fees on withdrawals, and they limit your withdrawal based on these terms. And these kind of change, but like notice the stable coins. So like you could have a $10 cost to withdraw. But I noticed in the fine print, it says here, one free crypto withdrawal and one free stable coin withdrawal per calendar month. So you get free, I guess that's 2 if you do. I'm going to be withdrawing to a bank. So I'm not, the crypto I own will probably just always stay in here, at least for now, unless something changes. And then, so the interesting thing here is even if you hate everything about crypto or you're not interested in the speculation of it, the aspect of this that I really find interesting is these two stable coins right here. So stable coins track the US dollar. So you can put money in US dollars into these stable coins and earn 8.6% interest on that money, and it won't lose value to the dollar. Now, to me, that seems silly not to have some of your savings in something like this if it's paying 8.6% interest. Now, the red flag should be that's a very high interest rate. So you should know that there should be risk involved. I know that. I'm comfortable with the risk I'm taking. If I lose it all, okay. And notice that these accounts are not subject to FDIC or SIPC protections. So it's not a real bank. It's not FDIC insured, nor is it a brokerage account. This is a BlockFi interest account. It's not backed by the government. It's not considered legal tender. Like, it's just, this is a very weird thing to be doing. But 8.6% interest, you transfer it back to your bank, then you use that money. So kind of something I thought about kind of as a funny way to be speculative is, what if you took your credit card rewards, say you get cash back, and you stuck the cash back reward into BlockFi, earned 8.6% interest just on the stable coin. Then from a portion of the interest you earn from the stable coin that you put in there, speculate in buying Bitcoin or Ethereum just for the, speculation of it. If you want to participate, what I just described didn't cost you a single cent, right? You took your credit card rewards, which, I mean, you could argue that that's money that you could have used for something else. Yes, but I'm just meaning it was money that you received that you didn't work for. You put it in this, earned interest, and then the interest earned on that, you used a portion of to speculate in Bitcoin. And so you're not spending a single dime you worked for, that if you lost it, it's just play money. Now, it's a really small account. I get it, but, it's something, right? Like, if you think along those lines, you can kind of test the waters. Now, I did think it was interesting that BlockFi is coming out with a credit card that pays 1.5 back in Bitcoin. So not cash back, but 1.5 back in Bitcoin. So you could spend money just like normal and earn Bitcoin rewards. This isn't out yet. I'm on the wait list, so I'll let you know how that goes. I think it's a very interesting product. I'm still bullish on Bitcoin, and I am learning to appreciate Ethereum. So those are the two cryptos that I'm buying. I don't know if it's a good idea. In the future, they could be worth zero. They could be as valuable as Beanie Babies are today. It's the same idea. So just be careful with what you're doing. I see this account fluctuate a good deal, but as stuff goes down, like, I will contribute more. So when this deposit hits, I'll probably leave a lot of this in the stable coin, kind of use it as an account. But if I see a big drop in these prices, you'll probably see me buying a little in at a time. Oh, something else to note. Did you notice? Okay, so the market is down, like the NASDAQ. So all these tech stocks are down. Now, the mistake I feel like I have made in the past, and a lot of people seem to make, is these become unattractive when they start trending downward. But I am not going to sweat the timing the bottom, because timing the top and timing the bottom are two very, very difficult things to do. That's what they talk about, where if you're in and out of the market all the time, if you buy and try and sell at the top and then buy at the bottom, yes, you could make a lot of money if you could actually time it that way. But like they say, you have to be right twice. So selling at the top, that's great. But if it rebounds, like if it falls and you don't buy in at the bottom and it rebounds and then jumps ahead of where you sold, then you're stuck having to buy back in either at a higher price or wait it out to hope it comes down again. And all of that is so stressful. It's too difficult to time the market most of the time. So what I end up doing, sort of to give myself the feeling that I'm timing it, is what you saw me do it a minute ago. I see the market's down today, stuff's on sale. I put in a buy order, even though it's just a market order for tomorrow morning. It could shoot back up and then, execute my trade, and I didn't really get that good of a deal. But if it trends down, I don't necessarily have to feel bad, because it's like each time it goes down, I'm just buying a little bit more in as it goes down. So now that these are falling in value, I'm more attracted to these because in my mind they're more on sale. Now they could continue a downward trend for a long time, but if I believe in these companies, it doesn't matter. Most likely, the share price will be worth far more for Netflix than it is today in 20 to 30 years, or even just 10 years from now. We'll see. I could be wrong, but that's kind of how I think about it. I don't try and be perfect in my timing, but I do want to time it a little bit just to have a little more control over it. So instead of just blindly investing on the third of every month, no matter what the price is, I like following it a little bit. I like paying attention to it. So I think by doing this, I'm kind of doing what I should be doing and not paying too much attention, but then also giving myself the feeling that I'm more in control and not just blindly herding with everybody, kind of being contrarian at the same time. I don't know. Again, I set these two portfolios. These would probably be one portfolio minus my daughter's account if I were doing it for myself, but I kind of wanted to differentiate for, explanatory purposes. I don't know. Maybe down the line I'll appreciate it more. Where like, oh, this does make sense that these are. You have growth over here, and you have more dividend and interest bearing stocks in one place. So, yeah, that's where we are today, and I'll update you soon. Oh, also, I've noticed, so today is Thursday, March 4th, and I've noticed we've had, I guess it was last week, and I don't know, I feel like it was more than that, where I was noticing Thursday would be a down day, and sometimes Friday too, but Friday would bounce back, kind of people buying the dip, I guess, but I don't know. I'm not really sticking to that Wednesday schedule that I originally proposed, but we will press forward and just keep making money. Thanks for watching, and let me know what you think.